All right. Good morning, everyone. Dan here with tradingology.com. We're going to be starting out February. Turn on the video. We can get the ball rolling here and we'll let everybody in the door. All right. Good morning, everyone. Dave, it looks like I see you out there.
Morning.
I can hear you. Let me adjust my volume a little bit. There we go.
Good morning. Can you hear me now?
I can hear you now. How you doing?
Good. How you doing?
Very good. Welcome to February.
Is it February? Wait a minute.
Already February. You believe that?
I don't trust you. Let me check.
We might be in a repeat mode. It was Groundhog Day a couple days ago.
That explains it. I still feel like it's December 2019. What happened to January anyway?
They go in a hurry, don't they?
XRP just broke my critical levels. I had a alert set up at 0.261, and it just broke through there.
You had an alert set where on it?
At 0.261.
Nice.
Yeah.
Good morning, Mark. Good to see you.
If it goes above that, what happens is it looks like it's off to the races. So compared to BTC, we're up over almost 6% above BTC at this point.
Nice.
Yeah, very nice. Since I am one of the largest bag holders of XRP on the planet, I'm very happy.
It's been a nice week or so just watching it slowly go up for sure.
Yeah.
I know we got some newcomers in here, so welcome to anybody that's the first time.
Oh, we got newcomers. Welcome. This is awesome. Good to see you guys.
We got a little treat for you guys today, so we'll get to that in a little bit.
Yeah, we got some good stuff here. You got a full hour today, Dan, or you need to cut off?
We got until, it should be the full hour, yes. I don't have any. Yep, we're good to go. I had to double check my calendar.
Oh, you're doing the video today, huh? I can do video, I guess.
I figured I'd say hi, just in case we got some new people that haven't seen me before.
Yeah. Oops. Do I have my, yes, I have my black tape over my camera.
Hey, there's Dave. Good morning, sir.
Good morning.
For those that haven't been here before, Tradingology, we talk about some intraday possibilities, swing possibilities, whatnot, just review market activities. We don't necessarily do in and out trading in our trading rooms, but we want to give you guys education and how to help out, make your trading better. So I have lots of things we can show, question and answer. If you guys got things going on, as you have them, you can pop them in the chat windows there. And if you're watching the video after the fact, you'll still get to take advantage of some stuff, but you won't have today we're going to get some good stuff for people that are live. And I think we're going to open this up like once a month to not only Tradingology members, but anybody that wants to jump on. So we'll get some new people asking new questions.
Yeah, welcome, guys. So, Tom made it to the room this morning.
2 weeks in a row.
Tom B, yeah. He did some deep dive digging and found one of my books that I mentioned in the Wealth Masterclass. Well, it wasn't the book. I wrote a book on how to sell used and rare books on eBay, and he found a copy of a follow-up report that I wrote back in 1999.
Wow.
Yeah, he sent it to me. I still, the original one, I know I have a copy of. I'll send it to him. I've got it on one of my G drives. I've got like 5 or 6 G drives in my closet. I have to dig it out. But I mentioned that in the Wealth Masterclass is a really easy way to make money. I mean, it's like tripping over $50 bills. It's unbelievable. Still works.
Absolutely.
So Andre has a question.
Andre says, what's with the market? We're expecting to drop with all the bearish herding. Well, if we take a look at the spreadsheets, and I pulled them down myself and updated it for yesterday.
Yeah, we got bullish herding yesterday, so I don't know if it's going to be an orphan or we're going to continue to fill that out. But we had lots of bearish herding there for a while. But look at the drop in the flow yesterday. If you guys are subscribing to the daily updates on that, I mentioned in the notes section that we have a drop in flow from 148 to 126. Typically, that's a 22% drop. That's net. That's a pretty big drop, and that indicates bullish sentiment. So,
yep. So that in condition with the first bullish herding end you got, and absolutely that's why we're seeing our up. So I took a look at those last night. Same thing on the NASDAQ side, where we saw the column filled in.
Mm-hmm.
So you're always looking at the spreadsheet high level for the barometer of the dailies. And then what's nice is the strong market scripts, and I have a bunch pulled over so I can show you these guys, is this is a daily chart. So showing the MT vol levels coming back down, and then the balance of power curve is what we see here. So that's the way to look at it. And then also the herding. So yeah, so we see that first dot filled out. That's that first column filled out. So you can see it at the chart level, you can see it in the spreadsheet, and then you can also bring it down to looking at it during the day. So this is high level daily, and here's the same chart just on a 10-minute chart. So we see we've dropped way down. This isn't going to be the same as the exact number since we are intraday, but right now you see we're 44 on the NASDAQ, or excuse me, the NDX volatility level. So low volatility right now, all bearish, or excuse me, all bullish herding. So right now that's why everything's a positive sentiment.
Yeah, and just to point out on the NDX there, you've got we dropped from 100. That was yesterday, right? Yeah, we dropped from 100 down to once it's above 100, it's very, very bearish. But as soon as it drops below that 100 mark, that's bullish. And we dropped below it significantly yesterday, setting up today's bullish action. Tom B is multitasking. He's monitoring 2 meetings at once.
Tom's got lots of monitors too, so that's one thing for you guys that are here today. As some may have heard in the past, Strong Market no longer directly sells these scripts, so they have authorized resellers, which Tradinology is, and normally these sell for $2,500 for all of them. So it comes with everything. It comes with the entire packages, the MT synth, the MT signals, the oscillators, all the scripts. Normally that's a $2,500 bundle for the complete market timer system that Dave and the Strong Market team originally built. You guys that are on the stream today, if you don't have these yet, they're going to be available for $500. So if anybody that doesn't have these, or you're brand new and you want to get them while this is live, you go to tradinology.com/MTS for market timer system, and you'll see all the information's there. You can purchase it, put in the coupon MELT, MELT, and that'll get you $2,000 off while we are live today. The coupon is not going to be good after this live meeting. It's going to drop down to like a $500 coupon. So if you don't have it and you're looking for it, this is your opportunity, and that's your gift for our new guys out there and anybody that's live right now.
Yeah, that's only why we're live, right?
Yes, that is correct.
Yeah. Okay, so yeah, definitely take advantage of that. Do you have a link you can throw in the chat there?
Yeah, let me type it in here.
Yeah, all of the scripts that are part of the system, the complete market timer system, or what you see there, plus some others, and they're just like basically 40 years of study. Now the MT synth is interesting because it doesn't depend on market internals. It's a little bit different. The MT synth is what volume would look like if it was honest volume. So there's a lot of trading in volume that is either wash or fake volume, fake bids, fake ask. This is actual. This is and also the synth can also be used on any chart, not just the indexes. So you can use it on individual stocks. You can use it on Forex. You can use it on cryptocurrencies. You can use it on anything. The other ones are specifically for the indexes, the NDX, the SPX, and the Dow. 40 years of study went into this, guys. So if you You know, I can't trade without them. That's for sure. Not anymore. But you know, if you're serious about trading, these are serious tools for you. Tom B says, thanks for the book stuff, Dave. Perhaps I won't find $1,000 first edition, but I do have one in my possession that sells for $70 on Amazon. He got for $3.99 at a thrift store.
Nice.
Good for you. I told the story of I got the A for Alibi book by Sue Grafton in the Wealth Master class. And that I picked it up at a dollar sale at the local library, which I turned around and sold for a dealer the same afternoon for $800.
Wow.
I mean, it's just like, it's like tripping over $1,500 bills. It's so easy. It's unbelievable.
Keep your eyes open.
Yeah. If you know how to identify first editions, it's pretty easy. Very easy money. Garage sales and estate sales and those kind of things are starting to pop up pretty soon in our area once spring breaks. And, you know, I you know, if I have time, I'll stop at one or two and pick out a book. One I did last year, a dealer had already been through the estate sale and he picked up a ton of books. He missed one though. It was a 1923 mystery with a dust jacket on it, first edition. I got it for 25 cents and I sold it for $400. So even dealers miss stuff. John P.S., what are the dates of the next masterclass in February? I am selling the recordings now for the January meeting. I can't do a live session in February. And so I'm doing I'm selling the recordings at a $700 discount right now. John, if you want to wait for another live one, that will probably be maybe April. I don't think I'm going to get to one until April now. But you can definitely get the recordings. And you also, if you do get the recordings now for the Wealth Master class, you'll be able to attend the February live meetup. So we're doing a live meetup in February, live online through Zoom. Yep. So it's $700 off right now. And that lasts until February 5th. So we got one more day. So we're starting to see a little bit of pullback. Now, Andre's question above here, if we go back, I'm going to scroll back up.
I wanted to sneak back to Stephen too. I think, Stephen, you're the new one, right? And then you wanted to explain the atomic entry process. I can quickly show that.
Okay. Yeah, let's do that.
Yeah. So what I've done is I've pulled over the 5-minute and the 1-minute chart because I typically look for that as a combo. And there is specifics exactly on this back in the member site, but it's actually keyed in atomic entry. So check out that, Stephen, as well as what you do is if you have an up bias or a down bias, we'll just take this for an example. Where today I was expecting to pop up at the open, which we definitely did. And I was also expecting higher volatility because we are at a potential peak level right now. But the way the atomic entry works is you're watching the bell curve here on the VA bell curve oscillator. And what it typically does is it oscillates up and down. So if we look at overnight, where the better formed bell curves that do work in conjunction with the nth column, which I have set to 8 right now. So when you're looking at that, if you're looking for an atomic entry, we'll take this for example, say I have a bias to the downside. And this is right around when I want to open. So I want to look for it to form to the other direction and then start moving my way. So the atomic entry would be once this bar that I'm hovering over completes. Because then I'm expecting the downturn. That's what we consider an atomic entry. It's just basically right before the turn in the direction that you expect because we're already to this side. So there's less probability that I'll continue. It is always possible. Anything is possible. But it's all about probabilities is what we're doing in our trading. And we take the highest level. So that's how we define the atomic entry as once it starts moving the other way. And that works on both the 1 and the 5. Obviously, the 5-minute is going to be higher level. Then as you fine tune that, you'll see within those 5 minutes, there's also the 1-minute ebbs and flows. So that's how that goes. So he says, got it. Thanks for clarifying. You're welcome. And so which one did you want to go to next? Andre's on, we already covered the bearish hurting.
Yeah, let's take a look at the general market. If you have the Dow up there on a on a daily chart. Take a look at that. Interesting that, yeah, see, now we had bullish herding yesterday, but the question is that going to be an orphan? Because if you show the spreadsheet again, you'll see there's only one bullish herding in the first column. And just like the previous one, back just up a couple of rows there, it's what we call an orphan. An orphan is the beginning of herding that did not fill out. There was no support behind that. There was no one. So each one of the bullish herding marks, even though it's a 1, it could be an X, it could be a 0, it could be anything. I just put a 1 in there just to designate it. It means that there was enough buying by the bullish herd to push the market. But after that, nobody followed in. Nobody kind of piled into the trade. Instead, it went negative again. That's why we had that 600 point down day on Friday. And now we've got another, it looks like people are trying to bid up prices again. We've got more bullish herding, but it's yet to be seen if we're going to see, that become an orphan or not.
Yeah, will it have follow through or not?
See if there's any follow through. So on the daily chart, let me take a look at that real quick. You see, right, today's prices were kind of filling in a little bit of a gap there that we dropped down. What date was that? Where was that gap? Right there.
Back here?
Yeah.
Yeah, that one touched it there.
Filled it in. Kind of came back up. We haven't made a new high yet. And see, what happens is when we start to see days in which we have, prices moving 300, 400, 500, 600 points a day, all that means that there's more volatility. It's high volatility, right? 1% moves or better. Those kind of days you have to kind of keep an eye on. And so today, even on the daily chart, you can see that the market time or BOP, at least as of now, is that on today? So do we have any bullish herding? Is that?
The first line is filled out right now.
Okay, so we got a little bullish herding. I would keep a very, very close eye on that to see if it disappears. Because as long as we're still in the trading session between 9:30 and 4 Eastern time, if that dot there, which represents a group of individuals that are bidding up the market, if that disappears, that means that their buying power is diminishing. And, that could be somewhat bad for the market.
And we see MT vol has popped down just below 100 right now, where we're 97 on the NDX and 98 on the New York Stock Exchange. So we're right around that 100 level. Yep,
that 100 level right there is the tipping point between massively bearish and massively bullish. So if it's just at 100 or over, that means more than 50% of the participants in the market are bearish. If it's under 100, that means that 48% of the participants in the market are bullish. I'm sorry, they're bullish. And so, if I got that right, 48. So no, so 52. So it's inverse. 52% are bullish. So once it hits 100, though, that means they're 50-50. Mark says, I just signed up for the masterclass. Always love your content. Thank you, Mark. Appreciate that. I think you're really going to enjoy the masterclass. And every single month, we're going to be doing meetups on Zoom. And when you get into the download area, download that file, and in there is the Zoom link for the February meetup. We're going to do it every month.
Steven,
now look at the NDX on the daily. Look at that. You see that cross there?
Our little donkey.
Yeah, what is that? It's a death cross, they call it. And for candlesticks. If it closes like that today, that's not a good sign.
Right. Stephen had asked another question there about the 4-hour chart.
Mm-hmm.
On the ARB, let me sneak that guy over for a second and see what we got here. Do you have the MT oscillator to determine the 0.3 level? Yeah, so on the daily and the 4-hour chart, I keep that at that 0.3 level, looking at the oscillator, because that will be what we've determined the majority of average daily move, which is slightly reduced that we saw in compared to 2018. So yeah, I keep that at 0.03 just as a reference point, or that's actually it's at 0.05 on the daily chart, excuse me. I do it at 0.03 on the 1 and the 5 minute. Excuse the dog in the background. We're dog sitting and he's a little lonely right now, apparently looking for his master. But yeah, so that's how we're capturing profits. If it does capture at any given time, that's a good sign to exit, as well as if you're hitting those nth column extremes. That's a good sign that it's going to turn back around as well. Does that help you, Stephen?
Yeah, so we determined that about 70%, 65 to 70% of the move on an average daily basis is at 0.3%. 0.3% move. So that's why we have it there. Yes.
All right.
So on the dailies, though, it does. I mean, here's what happens when we go into. I mean, I don't know if you guys were around and trading in 2008, 2009, but we had days in which we're up and down 500, 600, 700 points. Now we're at higher levels. So from 2008, 2009. So we could end up seeing 800, 900, 1,000 point days. And we start seeing that kind of stuff. That indicates that volatility is increasing. Liquidity is being taken out of the market. And, we could see lower prices. Now, if we get a nice jump like this and then we start to pull back, like on the SPX, we're at 32.92. If we come back down and fill that gap that we created today on lower volatility, in other words, not just the VIX, but I'm talking about the actual spread of the daily bar, the actual range of the daily bar. So if we start to see smaller ranges on those bars, that means volatility is being taken out of the market. And we could see definitely a new highs. So it's just not volatility as represented by the VIX, but it's also the size of the range of the bars. See, like if you go back actually on the SPX, you see those 3 little red ones? Yep, right there, right below where your mouse was.
Oh, right here.
Yeah. You see how small those bars are? Even though they're red, it indicates low volatility. And the market just took off from there. Went higher because those bars are relatively small compared to the daily percentage moves are very, very small. And that indicates a lower volatility. And actually, that is in the winning trade system. That's a technique I taught in the winning trade system on Tradingology. You watch for those. And the ones to the right now that we've experienced over the last week are relatively very, very large.
Drastic differences.
Yes.
And also looking at, your SPY VIX, look what happened in the last week.
Mm-hmm.
If we have our trend lines on, this is on a weekly chart. And I think I drew these. I think these are drawn from the weekly charts. These little mini trend lines. Or it might have been from a daily and then overlapped. I forget. It's been a while. But I'm keeping track of these guys.
Yep. So we broke it right back up to the underside of that trend line. Could be resistance there. We'll see.
Each time we've broken it before, we've seen big drops.
Yeah.
I was trying to look at it like, is there any way that this trend line's wrong? But I got so many touches here. Even if you'd extend it back to here, it almost lines up.
Yeah. We got quite a few touches on that one.
4, 5, 6, 7, like 7 touches on there. So that is definitely one to keep your eye on. Yeah, we might be happy today. But the one thing that I thought was a comic relief was last week with everyone talking about the coronavirus in the market, where one day it causes the big drop, and the next day they say there's larger fear, but the market rallies. So I'm like, you can't use this anymore. I'm done with you guys using coronavirus as an excuse.
Yeah, I know.
Because it went both ways.
Yeah. I mean, they'll use it as an excuse, but it may affect the economy over the next year, because if you think about it, the Chinese economy is really large, number one. And I mean, they've got people, the WHO has announced that it's now a global issue, a health crisis. You've got Wuhan, which is the province and city that started this virus, has been quarantined. I don't know if you saw it or not, but they are putting dump trucks full of dirt on the road, so people cannot leave that city.
Wow.
The Chinese are just closing it completely off. Also, the number of cases that of people who are infected now have jumped dramatically. The fatality rate, thank goodness, is relatively low. I think it's 0.2%, but it's spreading very, very fast.
Steven's asking, is the 8th column script for toss like the 5th column? Yes. So the latest one that we use is called the nth.
Yes.
So you can pick whatever number you want to put in there. So we have it set to 8, or I have it set to 8 because that's the highest probability we found after doing the further analysis. But you can adjust that. You can make it 5 columns. You can make it 8. You can make it 10. But yeah, it's the nth column is what it's called. Then inside the gear is where you set it. So on like the 5-minute chart, I'll pull over. Here's the nth column. I have it set to 8. If I come into my studies, I'll edit him quick for you. Yes, it is in the download section for the VA masterclass. So it's separate from the other downloads, since that's only for people that have that masterclass. So that's where you find all these VA scripts. Then in the gear here for the nth column, click the gear, come into the customizations, column level is right here. This is where you adjust it. That's the only thing you have to worry about modifying for that one.
That's a really nice feature. Andrew did an excellent job on that.
Yes, kudos to Andrew for that. Is he not with us today, but I'm sure he'll catch us later.
Also, he created a new script. Let me see if I can pull it up here. Where is it?
Oh, and I forgot to mention, as part of the new complete market timer system, anybody that is a current Tradingology member that does not have access to the VA Masterclass gets an automatic upgrade when they get that complete market timer. That is a bonus we have for Tradingology members. So I completely forgot to add that in. So it's that same Tradingology.com MTS. Right now, live, it's $2,000 off the regular price, $500. After the recording, the coupon will drop to $500 off coupon. The coupon is MELT. And if you are a Tradingology member, you do get free upgrade to include the VA Masterclass, which will have these scripts that we just showed. The VA Bell Curve, the VA Nth Column, the VA ARB Oscillator, those are all included in that Masterclass. And do you have one you wanted to sneak over?
Yeah, this is a script that Andrew came up with. Just to give him credit on this. This is very interesting.
I can figure it out if you want to share.
Yeah, hold on a second. Let me get it queued up here.
Okay, no problem. As a little teaser, Dave was mentioning, volatility and liquidity in the markets. I found a nice little website where I can show you guys on how to track this and how much repo and reverse repo activity the market is doing, or the Fed is doing. So I'll make sure I don't forget that after we talk about your next script here.
Yeah, absolutely.
So lots of, whether you're doing swing trading, day trading. There's you can set them up differently, so it's not just one spot that it works. We did have one member also ask if they wanted to do it with a tick chart. So we do also have, Renko Cloud specifically for tick charts. We see this one's adjusted for 500 ticks. We see the countdown going that you use in conjunction with the price signals. So whatever type of trader you are will help you get better, whether it's intraday or swing. They are all included in the package.
Okay, I am ready.
All right, I will stop my share and turn it over to you. Since you are the Zoom master now. Here he comes. All right, I got you're looking good.
Okay, beautiful. Well, this is a script after Andrew and I had talked a little bit about the put call ratio. There was something on the on CNBC and also in Elliott Wave International. If you guys subscribe to Elliott Wave, Robert Prechter's publication on the markets, and he mentioned that the put call ratio was at the lowest level recently. I think in like maybe 10 years or so. So Andrew came up with a script here that tracks. This is the put call ratio tracker. And basically when it spikes, when it goes really, really high, it means a lot of people are buying puts. Of course, they always buy at the wrong time because it's right at the bottom of the market, right? This was back in December of 2018. It spiked up to about 8. That means 8 puts to 1 call were being purchased. And of course, the market took off after that. Now, if you use it in conjunction with some of the other scripts, for example, the X factor, they were all at extreme levels. The price signals were all at extreme levels. It does give you a little bit of an advantage here because you see that the put call ratio is very, very high. And then recently, I'll go up to the current day, we have a put call ratio down here, which was very, very low compared to all the rest at 4. So there were, and this is, I'm not sure exactly how he has this measured. And I believe that it is a 7-period moving average of the put call ratio, what he's got here. And so at this level, there's actually more calls than puts. So you can see here that there was a divergence between the different between the put call ratio and what we had on the X factor and the price signals. So we had a declining price signal, we had a declining X factor, but it lasted much longer than anybody anticipated until we got up to here. We saw a slight uptick in the put call ratio. So they were starting to buy some puts right in here. You're talking about large players in the market starting to buy some puts here. We haven't seen any kind of an extreme. It only hit 6, and the typical peak at bottoms of a market are right around that 7-8 level. And so we didn't see that yet. I don't know if we're going to see it or not. Maybe that's the top. I don't know. It's down a little bit today. But I thought it was an interesting script that he's developed, especially when we get some of these real extreme sell-offs, like back in here, really nice peak up around that 8 level. Right in here when we had this nice little three-leg bottom. You can see it peaked here, but then it declined. So it's just kind of a system that kind of gives you an idea of what's going on. Now there's a peak too. Once it reaches those levels, that could be the end. That could be the end of the move. We haven't seen that yet. So I'm wondering if this is, if this is going to go a little bit higher here, see if we hit up around that 8 level again. But I thought I'd share that with you.
Interesting how it's trending down too. If you look back to December and the peak kind of trailing down, where that could definitely line up.
Yeah. Yeah, so we got this. I mean, I just started playing around with this. I suppose one of the things that you could do, maybe put a little trend line on there. Yeah, just to see.
Yeah, interesting.
Yeah, see if we get anything on that. Yeah, it looks like it's in a little bit of a downward channel, maybe. Looks pretty good to me. Maybe we'll come back down here before we start to spike up. But the important thing is when we do get up to those levels, and we've had a bit of a sell-off, it could be an indication that that's it.
Yep, rally time.
Yep.
Interesting. Good job, Andrew.
Yeah. It's all yours.
We're back. All right. Excuse me. All right, a little bit past halfway. Any questions you guys have so far? I think we've covered them. Yep, Stevens were the last ones there. Nothing new. Oh, me and Dave were talking about this. We'll pop over the Renko Cloud for Tick. Yep, we're done with him for now. We're talking about where the liquidity is coming from and how all this activity is happening. Here's a site. I will. There we go. I don't think it needs to have all these in here. Let me test this once for you. Yeah. Here's the link for this one. This is maybe it does need all that garbage. Okay. Either way. So this is showing how much liquidity the Fed is actually doing on a night-to-night basis. So here's Tuesday. This is this morning. $64.45 billion of repo activity last night. And multiple prices repo 64, then another 59. Oh, see, okay, check this out. So this is 1 day settlements, delivery date, maturity date, 4th to 5th. Look at this.
Yeah, that's 14.
4th to the 18th, another 60 billion.
Yep. So they have one that's short term. They have one that's 14 days.
So that's 120 billion last night, just right there.
Yeah. So yeah, I mean, $6 trillion since last September when we started talking about it. That is almost. There's 21 trillion injected back in the 2008-2009 financial crisis. Now we're at 6 trillion already.
So a year and a half versus since September, October,
Yeah.
November, December, January, 4 months. We're just
4
in
months
February now.
And why would they do that as the market is continuing to move higher is a really good question. I heard a number of people talk about the fact that there's probably one big bank that is just gobbling up the liquidity.
Yeah, they can't say who it is, right? Obviously.
No, they won't. Now, some people have said, and I think this may also be accurate, is they're moving a lot of the liquidity to Europe. So the one big bank is gobbling up the liquidity. They're not participating in the U.S. repo market. They're taking that liquidity and putting it into London and the Eurozone. I think they've got a bigger liquidity problem over there. I'm not sure. I think it's the central banks. The Fed can't go in and buy directly. They have to use their dealer market. So they're going through JP Morgan, I'm assuming here in this case. And JP Morgan is really using that liquidity and storing it overseas. They did the same thing in the 2008-2009 financial crisis. They drew liquidity out of the system and put it overseas. Interesting. So they're putting it into the FX markets. It's not a terribly good sign for the economy that we have to do these kinds of injections while the market's making all-time new highs or near all-time new highs. What happens when the market drops 10%? Where is the liquidity coming from then?
Then you go from 60 to 600 billion a night.
Yeah, exactly. You know, and there was a tweet. If you look at the rate of the M1 money supply, the M1 money supply is going up at, I think it was, I tweeted this out, it was 6.7% year over year, 6.7% M1 money supply growth.
Wow.
And GDP and inflation is like added together isn't even, what, 2%?
Yeah,
added together.
They're trying to get 2% right now, and it's not even close.
It's not even close. I mean, they since 2008, they've injected all this liquidity to meet their inflation targets. They've fallen short every single year, no matter how much money they pump into the system. And so the M1 money supply is going up at 3 to 4 times the GDP and inflation rate. They are just blowing the money supply up. I mean, it's just absolutely insane. So the NDX just made a new high. Wonderful.
Did you see the other thing that we're almost inverted in the yield curve again?
Oh, really? Jeez. You over on the Treasury Department website?
They're probably going to hide it. I guess they don't want me to know again. Yeah, I've heard it's getting close to inverting again. I won't dig around too far because I don't have it at the tip of my hands right now. That is one thing I have seen over the last week. It was getting.
I'll get it. I'll get it, and I'll put it in.
Okay.
The chat here.
All-time high 92.91. It's pushing right now.
There you go. It's going to just show February, but let's take a look at the 10-year and the 30. The 10 and the 30 are too bad. Oh, look at the 1 month. The 1 month is inverted over the 10-year. So the 1, 2, 3, the short term is inverted.
Yep, it's happening again.
Wow. Yep. So they're pumping the rates up here, but trying to keep them at their target rate of 1.75, but they're failing.
Did you see what they added? We got the 20-year.
Yeah, they got the 20 in there now. Look at that.
What's it been since World War II, I think it was, or Vietnam? Which war was it that hasn't been circulated since then?
It's been, I think it's 50 years, so World War II, I guess.
Yeah.
That's insane. Yeah, so we are inverted now on the 10-year versus the 10-year.
Watch the headlines.
Yeah, I mean, that is insane. I am going to clip that.
It's going straight to Dave's Twitter feed. Everyone watch.
Yes, it is.
We found the source for this. You guys can all be part of this. Yeah, looking at, and we see definitely starting to come up. Like you say, another gap. We had the big gap down. We filled that on all of them. Now we have a gap up. So today will be happy, and we'll see where we end and how fast you want to come down and fill these gaps. Because the market doesn't like gaps. We know that.
Yeah, typically it does not like gaps at all. But in a very, very strong market, sometimes those gaps aren't filled at all. So we'll see what happens. But I mean, you got to believe that what was it, 60 billion plus another 59 billion last night.
Yeah, that's a lot.
Add a lot more liquidity to the market, and they're just putting it back into stock. So one of one of the themes has been the difference between an economic recovery on Main Street compared to really it's a financial recovery.
So here's a good question for you, Dave, too, since this is on here and we saw this where we have repo, that's our standard repo operations, right? We've heard all about that. If we go back and look at previous days, we see $4.5 billion in reverse repo on Friday, as well as the $45 billion in regular repo. So people ask, well, what's the difference between a reverse repo and a regular repo? And why is it, why do they track both? 3 days, 3 days. That was the same day. Yep, these are both the 31st. What constitutes the reverse repo for the easiest way for people to grasp that?
Well, the reverse repo is just a purchase of securities with the agreement to
it's like they're on the other end of it suddenly, right? Instead of maintaining, they're writing contracts on both sides. Yeah, these go back all the way, if you guys want to look back to it. So it's a running, I think it only shows the previous, like yesterday I was going back to the 17th, so you can keep track of these guys here.
Yeah, so the repo is just a collateralized lending. It's just, so the reverse repo is just the opposite. So it's the act of buying securities with the returns, reselling them back the assets in the future at a profit. But so it's kind of like selling short, you know. So, and they're actually buying them thinking that they're going to decline. So it's like selling them short and then buying them back at a higher price later.
Interesting. It's almost surprising they provide this, but most people don't know where to look there.
So they think that prices are going to decline. So if the price of the security, the T-bill, is going to decline, that means rates are going higher. At least that's their
evil crystal ball.
Yeah, so that's what they believe is going to happen.
Their thoughts, yeah. All right, we just got a few minutes left, gentlemen. Any final questions, let us know. Last few minutes left of the sale if you didn't get a chance. Tradingology.com/MTS. The entire complete system is $500 right now, normally $25, and then that coupon will be evaporated after the live. So this is our live for all of our people that we haven't met before. So welcome if you've joined us, never seen us before. Any questions after the fact, you can always email us at support@tradingology.com, and we'll do our best to get back to you as soon as possible. Signals are going off, audible alerts. Almost close to that nice true trend day, but not quite. 1,500, so it's definitely, everybody's still positive. We're stair-stepping up. Up volume minus down volumes, looking good. Everybody's, just looking for buying pullbacks today.
Yeah, I mean, if you take look at the MT XL internals, they're just right up that 80% level. So
just buried, yep.
Yeah, you definitely want to, buy those pullbacks. That's about the only thing that's going to work today. It's very, very rare that, and I mentioned this before, it's very rare for the market to reverse after the first hour. So if those MTXL internals are right at that 70-80% level, they are not going to reverse later in the day. So it's always, if you're doing short-term trading, you buy those, you try to get into those support levels. Like on the ES there, look at that perfect support level at those person's pivots.
Mm-hmm.
Right in there, perfect. and just below the Renko cloud too. So you had it just dip below the Renko cloud. You had the person's pivots. You had an MTXL. The internals up around 70-80%. Great opportunity to take a long position there. So the MTXL internals, and those are part of the that's in the complete market timer system. If you guys didn't pick that up yet, you really should, because it's an incredible price. But that will tell you what the day is like. If it's 70-80% or higher, it's going to be an update no matter what. You buy those dips. If it's 20%, 30% or lower, it's going to be a selling day. You're going to sell those rallies. And everything in the middle between 40 and 60 are chop days. Those are the days you got to really be careful.
So that's how he's talking there, Andre. Says systematically read. So that's the market timer internals, which correlates directly to the original market timer XL here. So this is up volume and up issues. This is down volume and down issues. The gray line is the volume. The green line is the issues, and vice versa down here, which is a different way of reading the internals here. So these are part of, again, the whole package. This was the very first one created. And then the other two here are just market internal data looking at advancing minus declining and
on the
up
New York
minus down volume.
Yep.
So there's no scripts here. This is just a matter of that's literally what's put in. And then so we're looking at anything that's over 2,000 or under 2,000 is where the lines are drawn. Negative 2,000 and positive 2,000. So if they're over that or under that, it's a major downer update, which will correlate to the internals. Then this we see stair steps every 5 minutes as the orders are released into the market. When we have these major trending days, we see it typically done controlled fashion like this versus being very erratic. Like if I come back to yesterday, I'll slide this back where we see it typically goes back and forth. So that's what these four are. So advancing, declining, up volume, down volume, market timer XL, original indicator, then MT internals is the four across the top.
Yeah, the original one, the original one and the MTXL are a little bit different. The original one will show you the separation between the number of issues and the volume. Typically, if the volume is higher than the issues, that means there's good, strong buying. They're both up right now, but
that's exactly, I was going to mention that. So the difference between the gray line and the green line is that separation of volume. So there's normally when it's that high, the volume's closer to match. I see how the lines are typically closer. So there is a little bit of a divergence there in the amount of volume and the issues.
Right. Doesn't mean the market's going to decline right away, but it is something that you want to keep an eye on.
Right. If this continues to go down and this kind of, it's, less volume, it's a potential for manipulation being seen.
Yeah, I've seen the divergence there where the volume was like way down and the issues were way up, and that is a pretty good sign that the market's going to decline.
Does that help, Andre?
And the new one, the yellow line is the average of the volume and the issues. So you've got the volume and the issues there on dotted line, the dots there for both the internals. And then you've got the yellow line, which is the average of those two. So it just kind of centers them.
Yeah, so you see green dots, gray dots, red, green, yellow, you got it. So I actually normally don't have to move that just to see these dots that are, at 90. That's really extreme.
Yep.
All right, Andre says he likes a good deal.
Good. Yeah, I like a good deal too. This is a very good deal. Yeah, so you guys definitely should pick up these scripts while we're live here. Otherwise, the price is gonna, it's kind of like buying the dip, right?
Yep, it just did. So
yeah, you buy the dip. You buy the scripts right now. The complete market timer system is just like buying the dips, but you're getting a great deal. Absolutely. And for you guys, again, go to strongmarket.com/wealth for the Wealth Masterclass. That also ends on the 5th. So we got today and tomorrow at midnight Eastern time. It's going to that sale is going to be done.
Just getting Dave's monthly updates is worth admission there.
Yeah, there's no monthly fee, so you buy in now, you get the monthly updates absolutely free. All righty. 4 more minutes and we're going to wrap this up. Interesting market. I think that with all of the money printing that's going on, the M1 money supply, I mean, back in 2010, August of 2010, we thought for sure the market was going to go back down and make new lows, and we've continued to go higher from there. If you looked at the Market Timer Excel spreadsheet, you saw that the bearish herding completely disappeared. We have bullish herding today, but we've had an orphan and very light bullish herding actually going back for the last 2-3 weeks. Except for one day there, we're up 267 points. Otherwise, the bullish herding has completely disappeared. We're starting to fill out the bearish side. So we'll see what happens, but keep an eye on that spreadsheet, because when empty volatility is above or right around 100%, we keep moving higher. I've seen the empty volatility reach as high as 150, 106, 70%. In the 2008-2009 crisis. But anything over 100% typically indicates that the surprises are going to be to the downside. The big reveal, though, actually the biggest indication that we're going to go into a major decline is the average volume per share, which is the column X there. If you look back at the 2008-2009 financial crisis, when it got over 1,500, which is 1.5 million average volume per share, that indicated that we were going into a major decline. So watch that carefully. That's the trigger for everything else. And we hit 1622 there when we're down 600 points. If that starts to pick up and we're at 1,500 consistently, and that's why it's highlighted on the spreadsheet. If it's consistently over 1,500, man, we're going to go into a major decline. So watch that as the trigger, and then the bearish herding as the continuation of the move.
Yeah, look at these. 15, 16, 15, 15. Look at this.
Yep, that's the trigger. That is the thing that can drive that market lower. But you can see we were down 800 points and it dropped back down to 1453. That indicated that there was no selling pressure there on row 911. We're down 1,800 in the volume. The AVS dropped down to 1453. But if you go back if you can go back quickly to 2008, 2009.
I don't know if I have that one.
Yeah, look at all that in 2016 too. Yeah, that's when that AVS is up, man. We're going into really, really declining territory, and it's all in 2008, 2009 too. So. Oh, you don't have it. You got to get the old one. Yeah.
I got the regular one here. Yep.
Yeah, it's 2016, definitely. Same thing happened in November, December 2018, I believe. Watch that ABS. All right, guys. Thanks for joining us. Yeah, appreciate it.
Buddy. Thanks for coming on. And just a quick warning for next week, I will be on airplanes, so if you got any questions, bring them Thursday, because we will be off next week. I'm doing some traveling, actually in airports and airplanes while we would normally do this meeting. So they wouldn't know it'll be trading rooms next week. So catch you Thursday. And Dave, I'll talk to you a little bit later today.
Sounds good. Take care, guys.
Thanks, everyone.
Thanks, Mark. Bye.